In today's video, I'm going to go over 4 options trades that I've taken in the past week. I'll show you 2 of them that were great winners and 2 of them that were great losers. I'll also show you the overall P&L curve of how I did this past week. Just a quick reminder, if you like this content, make sure you click the like button below and hit subscribe for future similar content. Also, if you want to join me in this options trading journey, I have a link to my free Discord in the description below. Make sure you click that and go check it out. So let's dive right into some charts of the options trades I took this past week. So one of the charts that I was super bullish on going into this week was DOCU, or DocuSign. Even on a zoomed out here since the middle of September all the way through where we are now, you can see this has a very clear uptrend with the lower highs and lower lows being put in over and over again. I was looking for a trade as we entered the week, and I was trying to figure out where the best time to buy would be and where my price target would be for this. So this past week started around right here, October 12th. That was the Monday of the week. And so going into the weekend, we had all of the price data up until right here. I was looking for good support and resistance lines to confirm a breakout where I would enter this trade from. This $230 level right here looked really good to me going into the weekend. So if I just draw a line right there, you can see that even though we did break above it just a couple days earlier, we immediately spiked back down, and when we tried to break up again, these candles right in here, if I just go ahead and zoom in, were all being rejected by this $230 line before we continued downwards. And if we just zoom even further out on DOCU here, you can see this same $230 level was support through this zone right here when we had this major move up and we came back down. We had a few wicks below 230, but for the most part, this $230 level where I'm hovering my mouse right now was great support in there as well. So this was a key area I was looking for a breakout in. So going into Monday on DocuSign confirmed my bullishness when we opened a gap upwards here. We gapped up about $4 on this chart and right near that $230 level as well. Now immediately in this first 15-minute candle, we did try to break that $230 level, but we came back and got rejected from it. Afterwards, we had all of these sideways candles hovering around that $230 line until finally this green one had a nice breakout and a continuation of it. And when we came back down to test that $230 line, you can see that we had these nice 2 doji candles in here that supported the $230 price very nicely. And it was right at the end of this red candle that I entered DocuSign. So once I had this confirmation that the $230 level was going to hold our price and that I thought we were going to go upwards, I started zooming out a bit and looking at the chart and figuring out where I thought we were going to go next. The next obvious resistance that I saw was this previous high that we had just put in a couple days earlier. So I had a line right in there, that $235 resistance, and I had a feeling that the first time we came to that, we would reject it. In order to actually choose my options contract when I was looking for a buy here, I was looking at the volume and the open interest and the price of all of the contracts. I ended up going with a $240 call on DocuSign that expired the upcoming Friday. When I bought into this contract, it was actually pretty pricey. It was around $4.9 or $490 to enter this contract. However, I had a good feeling we were going to push upwards and push upwards fast. The rest of the day moved up a little bit. We ended up pushing to about the $234 level. And then during the afternoon, we kind of came back down to the $231, $232 range. I was still holding onto this contract at this point. The price had not moved much. Maybe I was down a little bit or up a little bit at some periods of time in here, but I was still holding this and watching it for a larger move upwards because I did want to see what happened when we got to that $235 level as I was talking about. So then the next morning came and we gapped up again from the previous close. So we had about a $3 or $4 gap upwards in here, and we tried to immediately push upwards all the way up to $238. So the opening was really strong on this and it got rejected pretty hard. Again, I think this $235 level was rejecting us right in here. The very next candle ended up confirming the bullish bias I had on this, where we pushed well above this 235 and had a very strong close. And then the next red candle in here tried to break below 235, but ended up closing right around that 235. You can see it closed at 235.08, so we held strong in there, and then we continued sideways upwards for a bit in here, came all the way up to this $240 range, which put my contract just barely in the money here, maybe a couple pennies short of it. And then again, kind of just sideways movement through the rest of the day here. I was still holding on to this. We were up a little bit on our contracts, but the chart was still looking pretty bullish to me. Other than this red candle in here, I could have ended up selling in this area if I wanted to. I think I was up a good amount at this point since the price had moved about $10 over one day. But I held on to this one and I continued because I thought we might see a third day in a row of a gap up. So we closed October 13th pretty red here, and once again we did gap up from about $238 all the way up to $245. So this was a $7 gap upwards. Once I saw this, I was watching pretty closely and I actually zoomed into a 5-minute chart here. So I'm going to go ahead and do that and show you exactly what I was looking for to exit this trade. So the first 5-minute candle we had was this deep red candle. At this point, I was holding my stop loss right below the wick of this. So where this wick was rejected and the bulls held onto it, that's where I was watching to see if the bulls would continue to hold this level around 241. And we did. We kept going sideways a bit, ended up pushing even a bit higher all the way up to 246. I think my contract was around 180% in profit at this point in time. I knew that I would keep holding on to this until I had a bearish sign. And finally, this red candle that we had broke below that $241 level. I immediately sold when we broke below that, and I ended up selling this contract at 10.15, which gave me about 107% profit on this trade. Going into chart number 2 here, a second winning trade I had this past week was on FSLY. So FSLY was hovering the week around this $120 to $130 range. And then they had their earnings and the chart ended up dropping from about $123 all the way down to about $85 the next day. As soon as I saw this happen, I had a feeling we were going to correct some of that move. Because if you think about it, anyone who was in this trade and holding a short position was down a significant amount. They were likely going to take some profits, and I wanted to trade on the other side of those profits. So I bought into FSLY right on open here. We were hovering around this $87 support that I had already drawn on my chart, and I was looking for a push up to about 92. That was the next support I had drawn, and it was a small move up relative to the huge drop that we had down. I actually bought into an $89 call. The price was really good on these, so I only paid about $3.5 or $350 for an $89 call on FSLY here, and I rode the momentum up all the way on this. Again, I was looking at 5-minute candles for my exit on this. Once we got up to my $92 price, I started more aggressively looking for an exit on this, so I was watching these 5-minute candles. This one was the first one that started to give me worries because it kind of looks like a little hammer candle here at the top of an uptrend. So once this red candle was put in, I had put my stop loss right below the bottom of it, so right around 91.35 here would have been my stop loss. The next candle ended up being super green and super bullish, so I was still riding along at this point. This candle came in, again another red doji, and I was watching for my stop below this candle now. So my stop was all the way up at 92.82 in here. The next red candle kind of confirmed that I was just about to stop out of it, but I was keeping my stop steady at that 92.82. And finally this candle came in, broke below that 92.82, and I immediately stopped out at the beginning of this red candle. So again, I paid $3.5 for this contract. I ended up selling it right in here at 5.42. This gave me about 55% profit on this trade. So let's also talk about 2 losing trades I had. After each week, I go back and I review every single trade I took and I figure out why the winners were winners and why the losers were losers. I do this exact same thing that I'm showing you, but with myself, and I review every single trade in depth and I note down exactly what I did wrong and what I should have done differently. So here's one of my losing trades. I played Apple this past week, and it was right around the day that they had their conference going on. So they were announcing the release of the new iPhone. There was a lot of volatility in the stock. I was looking for a good entry into this. Now, if I'm zooming out to this and looking at this in hindsight, Apple is clearly in a downtrend in here, and so trying to play a call was just against the momentum of the market. This is the first mistake I made trying to buy Apple in here. But let's keep even diving further into it and ignoring the fact that I bought into negative momentum here, which is just not a great idea overall. Why did I actually buy into this trade? So I was watching the 15-minute candles on Apple here, and once I saw this huge red doji candle come in, it had great volume, as you can see down here. One of the highest volume candles of the day besides the opening candle, and then the next candle was another green doji. I was looking for a break above the wick of the green doji we put in, which would have been right around here, this $120.82 spot. So as soon as this next candle ended up breaking above that, I figured this would be the end of the downtrend in here. We had 2 dojis to confirm that, and the price looked like it was going to head back upwards. So once I had this break, I actually bought an $125 call, which again was mistake number 2 for me on this. $125 is all the way up here, so I thought that maybe Apple would start to push up and get to these highs again. However, I was buying something that was way too far out of the money. Since I was buying in negative momentum here, I should have been looking for a call that was much tighter. Maybe 122 or 123 would have moved much better in my favor. However, I bought the 125 call, I paid 1.37 for it, and then I was looking for a move up to those highs once again. Apple did move in my favor here. My original technical analysis went well, and so we pushed all the way up to about 123, and I think my contracts were about 20 or 30% in profit at this point in time. However, I thought we were going to keep pushing up, as my initial projection was that we were going to go all the way up to the $125 level. Again, I'm looking at this in hindsight, and this green doji candle should have been my first warning sign that maybe the push upwards was going to end. This looks like a pretty good reversal candle. And then the following 15-minute candle is this red candle in here, and once we broke below that wick of that doji, just like I've been doing in the past trades, I should have exited this trade, and it probably would have been right around break even at that point in time. However, I was blindsided by this. I thought that the conference was going to drive our price higher. I wasn't paying enough attention to the candles, the chart, the momentum, and so I kept holding on to this trade, and I actually held it through the end of the day. At the end of the day close, it was maybe down 20 or 30% at this point. I figured maybe we'd get a gap up tomorrow and I'd get lucky and the trade would go back in my favor. The next day opened and it was pretty bad sign for me. We gapped down from about $121 all the way to about $118, $119 on open. I ended up selling somewhere in the middle of this green candle, as I had seen this resistance that we were putting in right around this $120 level from all of this price action in here. And then as soon as we got back up to that, I took off the trade. I ended up selling this for about 0.47, making me lose 66% on this Apple trade. The fourth and final trade I'll show you is a lottery trade. So on Fridays, I like to enter trades with some of my profit for the week, and I put on super risky trades that are either going to make me a lot or pretty much just go to zero. I don't mind riding these out because I know ahead of time that I'm only using profits from the week, and so if I give some of that back, it's okay to take that risk to have a chance at multiplying these profits instead. So just zooming out on Zoom here, which is the trade I took, you can see this is clearly uptrending over time and even more in the most recent days. Since October 9th, we're just trending upwards very strongly in Zoom. And so on Friday open, I saw this gap upwards. We broke through this $535 resistance that we had previously had and ended up gapping about $10 up on open, followed by a super strong green candle. Now the next resistance that I was looking for in here was kind of this $560 range. So even though we're sitting at all-time highs, you can see that these few candles struggled around 560, got rejected, came back down. We had this beautiful red doji signaling a reversal. Second candle confirmed it with a break above our doji, and then this strong green candle is the one that I entered right after. So the strong green candle broke above that $560 resistance that we previously had. At this point, I was ready to open my lottery trade. It was about noon in the middle of day on Friday, but the next strike price available on Zoom was actually $570. So I knew this had to move up fast, but I thought with this green candle that it might actually do that. I ended up buying right at the open of the next candle once I confirmed that we closed above that $560 resistance, and it started to look pretty good. My trade was up maybe 20% or so at the peak here, but then we ended up just finishing the day sideways. We obviously came nowhere near that $570 strike that I was shooting for, so I ended up letting this lottery play ride to zero. I lost 100% on it. Again, I entered with a small position, knowing that either this was going to go to zero or I was going to make double or maybe triple my money on this play. So those are 4 of the 15 or 16 different trades I took this past week. Let's look at my overall P&L chart. So this is every single options trade I've taken in the past week. You can see that I thoroughly document every single trade I take, when I take them, what type of trade it is, what strike price I enter on, when the expiration date is, how many contracts I buy, what my entry and exit prices were. It then auto-calculates my profit, my fees, and the total percent gain or loss on each of the trades. Now I'm trading options with around a $5,000 portfolio, so let's check how much money I made this past week. If I just highlight this column right here, You can see in the bottom right corner here, it shows $627. I made around $627 this past week in profit. I restarted my options account on October 2nd by increasing the value of it. If you watched my previous options video, you know I was trading with super small amounts because I only started trading options a few months ago after trading crypto and Forex for the past 3 years. However, on October 2nd, I bumped my account value up into that $5,000 range. Here's my cumulative profit and loss since October 2nd. So you can see I started in the negatives for about the first week or so, week and a half when I first upped my account, and then I ended up finally breaking above into the green, and this was all in this past week or so where I was hovering high in the greens, and then later into the week I ended up going a bit downwards. So now looking at the cumulative profit or loss percentage, you can see that my count is hovering around 10% increase from where I started it as of right now. I hope this video helps you out and helps you figure out what you should be looking for when you're reviewing your past trades. This is a really key thing to do with trading, and it'll really help you grow as a trader if you go back and look at every trade that you've taken. Once again, if you want to trade options with me, I have a link to the Discord I trade in the description below. Make sure you click that link and come check it out. And if you like the content of this video, please do click that like button and hit subscribe for future similar content. I really appreciate all of your support.